and gentlemen, good day and welcome to the Q1 and FY25 earnings conference call of E2E Networks Limited, hosted by Part1 Advisors. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. I now hand the conference over to Ms. Purvangi Jain from Part1 Advisors. Thank you, and over to you, ma'am.
Good morning, everyone, and a warm welcome to you all. My name is Purvangi Jain from Part1 Advisors. We represent the investor relations of E2E Networks Limited. On behalf of the company, I would like to thank you all for participating in the company's earnings call for the first quarter of the financial year 2025. Before we begin, a quick cautionary statement. Some of the statements made in today's Concall may be forward-looking in nature. Such forward-looking statements are subject to risk and uncertainties, which could cause actual results to differ from those anticipated. Such statements are based on management's beliefs as well as assumptions made by and information currently available to the management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings conference call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. Now I would like to introduce you to the management participating with us in today's earnings call and hand it over to them for their opening remarks. We have with us Mr. Tarun Dua, Chairman and Managing Director, and Ms. Megha Raheja, Chief Financial Officer. I now request Mr. Tarun Dua to start with his opening remarks. Thank you, and over to you, sir.
Yeah. Thank you, Purvangi, and good morning, everyone, thank you for joining us today. I would like to welcome all of you to the E2E Networks Q1 earnings call for the financial year ending March 25. Let me briefly reintroduce E2E Networks and talk about the business of cloud GPU, or especially for the first-time listeners who might be new to the company. So E2E Networks was founded in 2009 and is amongst one of the largest Indian players in the cloud GPU market, which is based out of India. From our origins, we have championed contractless computing in India since 2009, and we count a lot of current unicorns amongst our customers in their journey from startup stage to unicorn stage. Our infrastructure as a service platform supports a large variety of compute workloads for developers, SMEs, startups, enterprises, higher education and research. And very recently, we have also been empaneled by MIT, signifying the suitability of our cloud platform for use by the government for their compute workloads as well. Our cloud platform supports a lot of cloud-native services, including CPU and GPU-based environments running on top of virtual machines or containers, or sometimes in serverless mode. So we have a number of very flexible, high-performance storage solutions, including object storage, block storage, parallel file systems, container-attached storage, ability to elastic file system. We also support network-based and advanced load balancing, virtual firewalls, NAT devices, queuing services, database as a service for a number of databases, including MariaDB, which is open source, and PostgreSQL, and vector databases. We have continued to build our AI/ML platform called TEER, which is targeted at data scientists and AI/ML developers for AI/ML workloads, which includes training, inference, model endpoint deployment, building an agentic framework, building RAG pipelines, and hopefully many more things to come in the future. So our entire platform is accessible online via myaccount.e2enetworks.com, via API services, via as a Terraform provider in the form of like command line tools that can be used by the developers and DevOps and data scientists to run any kind of workload, very similar to the way workloads run on any of the major hyperscalers today. So as of today, like majority of the workloads that we service now belong in the AI/ML domain and majorly work on the cloud GPU infrastructure that like we have built since 2018-19 onwards. Globally, cloud GPU has become like one of the most transformational technology opportunities for the coming next decade. And the value creation, which is envisaged by running AI/ML workloads on top of cloud GPU, seems to be like at a global level being measured in like trillions of dollars. Now, as an early mover into AI/ML cloud GPU and having built our own cloud platform from the scratch, like we see a very substantial opportunity in front of E2E Networks. And we are very focused on delivering like excellent value for money for our customers while delivering the latest generation of cloud features that our customers have come to expect from cloud platforms, which includes like basically the ability to run like some 25 different microservices and a lot of like backend delivery of services, which gets wrapped around in terms of like being able to deliver these services with security and compliance features. Now, in the past 1 year or so, like there has been a talk of like very substantial timeline lasting over a few months to more than a year for the delivery of hardware. Now, what we see today is that like the worst of the scarcity is now behind us. So we should be able to kind of like plan our hardware runs for much shorter periods now compared to what we did in the past, like when there was a lot of scarcity. So we continue to build our cloud platform features using a very strong software engineering team, and we hope to kind of like continue to remain the first choice for India and like many other countries, hopefully outside India, for their cloud GPU workloads. And we kind of like continue building our platform based on the feedback on like, okay, what are the new features required? What are the gaps in the current features? And this productization where like we continue to learn and continue to incorporate the features and bug fixes is what generates the long-term value and differentiation for us as people get more and more used to our platform and they have come to expect like reliability, performance, and the kind of features that helps them kind of like do the activities they are trying to do, run the workloads they are trying to run far more easily on our platform compared to other platforms. So that derives like long-term value for us. Now, we continue talking about like GPU-driven computing. Now, how exactly is it different from, say, CPU-driven computing? So, in the CPU world, like what we see today is that like at a very reasonable price point, like the number of physical CPU cores which are delivered within a single server are of the order of like about, say, 144 or let's say round it off to let's say 150. And typically you put like two physical CPU dies inside like one server. So which means that we are talking about like something like 300 cores. Now compared to that, like a typical GPU server, it costs 10x, occupies maybe about 2x the amount of space, consumes about 10x the amount of power, and depending on the kind of workloads. So we'll talk about the kind of workloads that GPUs primarily focus on, which are majorly highly parallel workloads compared to CPU, which is working on more rule-driven workloads. A GPU is typically able to deliver like, so GPU has like 17,000 into 8 cores in a single box, the CUDA cores. the GPU core. So that's like massively different from like about 300 odd cores that like a typical CPU driven server would have. And this GPU server also contains the CPU. So essentially a single server for massively parallel workloads driven by the state of the art and the AI ML techniques, majorly powered by open source, is able to deliver like anywhere close to like 1000x the kind of compute that like a typical CPU driven server is able to deliver. So which also means that like if you were to use the same number of cores or similar number of cores, the same order of the number of cores to try and run those massively parallel workloads which are coming from the AI ML domain onto CPU driven systems, you would have to actually do a lot of interconnect in terms of networking. You will need to set up like a large number of servers, occupy a lot of space. So essentially what you're looking at is that like your data center cost when running CPU alone kind of systems goes up massively compared to running by very high density GPU compute. Now this is the trend that we also see in our own numbers, where we have seen that like from doing low density CPU driven compute to high density CPU and then very high density compute on GPUs, like our operational expenditures like as a proportion to our revenue continue to come down. Now, so where exactly are the GPUs used? So like typically the data that was kind of like stored within organizations, within systems, was primarily driven by rule-based systems, where essentially like what was really needed for those rules to work shaped the nature of the data. So essentially what you had typically in any enterprise was that you would have relational data in the form of like a table. Typically a single table would have like say 500 columns, and then there would be entity relationships between this table and other tables, and the other tables would also have their own 500 columns, and then millions of rows or billions of rows of services. And then typically what would happen in a typical enterprise would be that these 500 tables interconnected to each other, each with 500 columns or maybe at least hundreds of columns, where each of the columns denotes like very specific amount of data, which could be typically be denoted by just a true false, maybe just a bunch of numbers up to 10, and denotes like a flag, denotes like a very small piece of information, all connected together, would constitute like a data diagram for like an enterprise software team, which would actually print it out on very large printers, cover up their wall of their dev center, and typically like people would be like looking at that and writing like a lot of software, rule-driven software to kind of like manipulate data going into this very complicated database-driven system to follow certain set of rules that have evolved over like organizations which have worked for like decades altogether. So the complexity would keep on adding up. You would keep adding exceptions. You would keep adding like a lot of rules to the system. And the CPUs were really up to the task of kind of like working in this environment and delivering like a lot of outcomes. Now, all said and done, like with these rule-driven systems, like essentially the organizations were really doing kind of like great job of like automation. But on the other hand, like if you look at like most of organizations' capabilities still belonged in the people, who would have their own set of mental rules which could not really be translated into like computer-driven rules. So, which is why we said that, okay, there is a computer exception that needs to be handled, then you need a human in the loop. So, human in the loop was doing 91% of the work, automation was doing probably only 5% of the work, and the organizations were working like reasonably okay. Now, with GPU and AI/ML techniques becoming like very, very modern, so what has happened is that like we have reached an inflection point of the amount of compute available for doing massively parallel operations, which can process a lot of probabilities in terms of like deriving inferences very similar to the way in which the human brain works. So you can call these things like models and artifacts, which essentially contain like a lot of like probabilistic rules, which kind of like run on, and an organization typically like which was only storing 5% of the rule-driven data can now actually afford to pass through this remaining 95% of the data through these GPU servers running state-of-the-art open source software models or the AI models, and kind of like start storing the knowledge derived from the passage of this data through these foundational models to kind of like get fine-tuned to deliver like inferences which are particular to one particular organization or one particular system in a way that it is more probabilistic, not rule-driven, so which is like slightly more human-driven. And essentially what we are saying is that like data itself is generating the rules for these AI systems. Now, what's the opportunity for India? Like we are talking about like something really sophisticated. We are talking about leapfrog technology. Now, India didn't have the wired broadband. Like we leapfrogged into the 4G and the 5G world. And what that has resulted is that like as we are 20% of world's population, we generate 20% of world's data. Now, the opportunity in compute lies in the fact that like India only has 2% of the world's compute capacity in terms of the amount of power which is consumed by our compute and the amount of compute systems we have running in our data centers. So which means that like about 10x the amount of compute still needs to be kind of like designed and delivered for Indian organizations, which has the capability to process like almost like 10x more data than we are currently processing. So if we are processing only like, so out of the 20% of world's data, like if we only have 2% of world's compute, so there is a gap between the amount of data we have and the amount of compute we require to process it. So which kind of like presents like the opportunity to leapfrog directly into the GPU sector, which requires a very different set of capabilities compared to what the CPU-centric world required. So this is the biggest opportunity that like we are trying to pursue in terms of like kind of like helping India leapfrog from GPU world to the CPU world. Now, so what has happened? Like, so the whole world has obviously realized this. Like, there are obviously developed countries which move far ahead in advance of what happens in India. And the broad trend we have seen in terms of shift in the computing has been that, like, earlier, the cost of compute compared to the revenue of an organization typically was low enough that people wanted software capable of doing everything from everything without worrying about the cost. So there was a broad trend of all the compute getting concentrated with very large hyperscalers. So who charged a lot for their compute because they were delivering the software capabilities of being able to service every single geography, every single workload from $5 to $500 million per month. And the R&D cost of like doing every single workload in the world for every single industry, every single organization required like a lot of customization. And most people ended up paying for the compute on hyperscalers, which was about 3 or 4x times of if they did the compute on their own. And there was no space in the middle, basically. So now what has happened is that like with GPU compute, increasing the percentage terms of expense for any organization in terms of the amount of compute they use to deliver the software stack within an organization, that number is now drastically going up, which means that there is suddenly a space for like specialized cloud providers who are not as expensive as hyperscalers, but in terms of capabilities, they provide like almost a similar functionality, maybe doing 10% of the features, but delivering 90% of what is needed by most organizations. So we are one such organization in India, and some of the organizations in the US have now shown that like it is possible to build like very large scale multi-billion dollar businesses in competition with the hyperscalers if you deliver like certain set of services in a fashion which is very similar to them and kind of like adds value in terms of like not having to do 80 or 100 or 200 different activities that a typical IT department of a very large organization used to do. Like kind of like there is new space in the middle for specifically for cloud GPU providers in every geography where people understand that okay, like what needs to be built, which is very similar to what the hyperscalers have built, but at like half the price or lower. And since like there is a massive amount of like money going into the GPU compute compared to what was going into the CPU compute, where like I think like you were talking about like cloud as a couple of $100 billion worth of business. Now we are already talking about like GPU cloud as like something like adding like so to the overall business of the cloud. So which means that this has to come from the pockets of enterprises and organizations. Now the advantage of like having specific cloud GPU kind of compute players is that like they can deliver this cost advantage very similar to the way they were delivering in the CPU world. Now, what was not proven in the market was that in the CPU world, like we didn't see like very huge examples of like very large businesses built in a short span of time. Now, in the cloud GPU world in the US and in many other countries, we are already seeing like specialized cloud GPU providers growing very big, very fast on the back of this new demand coming in for GPU-driven computing. So that is the category in which your company operates. And now I would like to hand over our call to our CFO, Megha, who will briefly touch upon the financial and operational heights of the quarter under review. Over to you, Megha.
Thank you, Tarun, and good morning, everyone. Let me first start by giving you some of the key financial highlights. I will summarize the performance for Q1 FY25. For Q1 FY25, the revenue from operations stood at around 417 billion, which witnessed a substantial growth of 112% on year-on-year basis. EBITDA for the quarter is 274 million, which further provides a growth of around 168% on year-on-year basis. EBITDA margin for the quarter is 66.34%, which demonstrates a growth of 1403 bps year-on-year. PAT is reported at 101 million, which demonstrates growth of 44% year-on-year basis. PAT margin for June quarter is 24.46% and diluted EPS is 6.75 for the quarter, which is around 41.8 or 42% year-on-year increase. If we do a quick comparison from last quarter, that is March, we have witnessed revenue growth of around 40% on quarter-on-quarter basis, from 296 million to 417 million in the current quarter. EBITDA for the quarter is 274 million, which shows a growth of 79% on quarter-on-quarter basis, and we have reported a net profit of 101 billion. That concludes the update for the quarter, and we can now open the floor for question and answer session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Pratik Singh from DAM Capital. Please go ahead.
Hey, hi. Congrats on a great set of numbers.
Thank you.
Yeah. So am I audible, right? Hello, am I audible?
Yes, please go ahead.
Sure. So So my first question is largely on unit economics from a rental perspective. So I understand that you'll be paying rentals to your co-location partners. So do we pay rentals on a per rack basis or on a per kilowatt or megawatt basis? And ballpark, how much would it be?
See, the individual figures are broadly confidential and covered under NDAs typically.
Sure.
Like long-term contracts. But roughly, like when we put everything together, then broadly, kind of like that comes down to about like incrementally for new high-density workloads, it comes down to about like say 10% or so of our front-end revenues on a unit basis.
Understood, sir. Understood. And the second question, sir, as you rightly mentioned, that the GPU-based compute servers consume way more power and the power density for those racks needs to be much higher. From what I understand is that the typical CPU-based racks generally are like 10 kilowatt per rack max and GPU-based are 50-60 kilowatts per rack. So are our co-location partners, do they have this kind of an arrangement where you can fully fit your 8x H100 GPU servers on one rack, or it's only a traditional arrangement where on one rack, instead of filling it completely, you're just filling one 8x H100 server which takes around 10 kilowatts. So the question that I'm asking is because we didn't have a lot of AI-based centers in India, right? So how is it working right now? Are we not completely filling the racks because then that will need a lot of cooling and all? So how is it working right now?
So, like, I didn't understand the question, but like I'll try to answer it as best as I can. See, most of the data center facilities, like including like any facility which was planned to be built even like say 4 years back, would not be built for like anyway was not very useful in very warm climate of India. So it used to make a lot of sense to do like densities of no higher than about 14 to 15 kilowatts per rack. Now, does that mean like there is misutilization of space? I probably wouldn't characterize it in that way because like you're not just running GPU servers, you're also running CPU servers, you're also running switching fabric, you're also running storage, you're running a lot of equipment. So overall, like any data center has to be designed with generic workloads in mind. Now, is it still able to run the GPU servers? The answer is yes. Like most of the data centers today, at least have like ability to run like the GPU servers without like any overall significant difference in the cost compared to a very high density data center.
Understood, sir. And the cooling requirements and all, the cooling facilities don't need to be changed. They are as it is as they were earlier.
Not for another 1 or 2 generations.
Sure, sir. And
I think like high density compute like that of the kind we are looking at like is still about like a year and a half to 2 years away.
Great, understood. And so my last question is largely on H200, which is now being launched. Would we be moving to them, or we think that H100 for now is enough sufficient for most workloads that we are seeing right now?
Okay, so like you have to match the workloads with the price per unit of teraflop. So like in that sense that typically like H100 would be slightly more expensive than H100. Now depending on the workloads, if you do not have like typically more memory requirements, you will continue to be able to use like H100 even for new workloads without having to spend extra for the extra amount of GPU memory.
Understood. Thanks a lot. I have a few more questions, but I'll join back with you. Thank you, sir, and all the best.
Sure.
Thank you. The next question is from the line of Prathamesh Tiwar from Tiger Assets. Please go ahead.
Yeah, firstly, sir, congrats for the good set of numbers. Sir, I have 3 questions. Firstly, on the capex side. So, I think we have announced around 800 crores of capex for FY25.
No, we didn't actually, that is not true. Like, we didn't announce 800 crores of capex. Somebody asked, like, how much would you like to spend? So, my answer was that, like, in an ideal world, if we had the money, we would like to spend that much. So, Yeah. So there was no announcement from our side as such that like we will do it